support and resistance was easy. Now we actually start thinking. If you still struggle with support resistance, do it again and again and again until price respects it. Practice until it works. Let's talk quickly. I'm gonna give maybe maximum 2 minutes on the structure and break of structure. You see this a lot, change of character, break of structure. It is important, but again, it's really basic information. So what is break of structure? If we have a bullish trend like I drawn here, the break of structure is here when we break the last high or last low. In this downtrend, when we're making lower lows, lower highs, our break of structure is when we break this low, right? When this happens, we have a new low. Once we break this low, break it, we have a break of structure continuing the downtrend. Now, something happens, what I call, or what a lot of people call change of character, is when we gonna bounce like this, right? We might call it break of structure because we broke the last resistance, but I would call it more change of character, and I would wait for confirmation. Now, let's say we make something like this. Now, what I will do in this case, this will be the last low, this will be the last high. For me, to see this as a break of structure, not a change of character, would be either this or either this, right? We have new high, new low, and I will wait for the break of structure for confirmation. Why am I talking about structure? And let me know, guys, if you want really dedicated video only on the structure, let me know. But I really don't want to stop here for a long time. So when we talk about structure, it's important to kind of have it on a when we paint the pictures with the time frames. So we always, when we talk about time frames, we always start with the higher time frames. And the same thing I just told you about, same thing you see on a weekly basis, right? We have weekly high here. What happens with the next weekly candle? We close above it, meaning we broke the structure to the upside. We continue the bullish trend. We look for longs mostly. Now the same thing, we have the weekly resistance, this small wick here. The next week we close candle above it, bullish structure, break of structure to the upside. So far we haven't seen, so to say, trend switch on a weekly time frame, but I can give you examples here as well. We have resistance here. We go into this consolidation, we have a lows here, and what's gonna happen? We break the structure to the downside. That's this how structure works. It's just the candle closes above the last highs and lows, right? And this applies to every single time frame. So as I said, high time frame more important, but let's get into time frames and what do they mean and how I approach time frames. So again, weekly time frame, daily time frame, they will give you the bigger picture, what's going to happen in the market. They're going to give you the maybe direction of the market for the next few weeks. But how, or what I've been taught of one of the most fantastic traders who told me this, was when you look at the weekly chart, you don't look at the weekly chart to see what's going to happen this week. You can kind of take it on back of your mind, but you're more looking on a weekly chart, what's going to happen in the next month. When you look at weekly chart, that should kind of give you a first story, what's going to happen in the next month, next 3 weeks. He told me to always multiply the time frame by 9. I prefer 3 to 5. So when I look at the weekly chart, I'm trying to paint the story, what's going to happen for the next 3 or 4 weeks. When I go on a daily chart, the same thing applies. I'm not looking at the daily chart regarding what's going to happen in the next 15 minutes. It doesn't mean anything in that sense. Yeah, we are bullish on a daily time frame, but I'm more looking on a daily time frame and trying to paint the story, what's going to happen in the next few days, what's going to happen in the next 3 days, 2 days, 5 days, what's going to happen in the next week, right? When I go on an hourly chart, I'm not thinking what's going to happen in the next hour. I'm more trying to paint a picture regarding what's going to happen in the next 3 hours, 4 hours, 5 hours, what's going to happen in the next 6 hours even. That's what I'm trying to see when I'm looking at a higher time frame. So let's do a quick summary. I look at the high time frame to get the overall direction of the market. Now I start, based on that, I start to paint a story. Okay, the market looks super bullish. We're likely gonna continue this for the next few weeks until we close candle below this low, which is our last low in an uptrend, until we actually close candle below it. Then I will kind of make my assumption that for the next 3-4 weeks, we are likely gonna go down on a weekly chart. Same thing applies daily, hourly, 15 minutes, and so on, right? So when we talk about time frames in general, or those weeklies and dailies, I wanna give here a little example that I always bring on my streams as well. And if you watch my streams, you probably know this already. I see those time frames as kind of ice on a lake. So as you see, I have a Google search, ice on a lake. So when we look at ice on a lake, this is a good picture. There is a man or maybe a woman, 2026, we don't know. They are standing on this ice and we can fairly see this is a thick ice. It's probably gonna hold them. Otherwise would be a little bit stupid to stand on it. But it's a strong ice. It probably will take hundreds, if not even thousands of people to kind of start cracking it and actually starts breaking it. But once you put 1,000 people, or maybe you need 100,000 people, we don't care, on this ice and they all start jumping, there might be a chance that they're not gonna stay on that ice, right? Gonna happen something like, let's see if you find the cracking ice. Well, okay, perfect. We found the picture. We're gonna have something like this, right? There's no more ice there. It's more a broken ice. Or this one, right? We have cracks on the ice. Why am I talking about ice in a goddamn trading framework time frame video? Well, there is a simple reason. The same way we talk about how when we look at weekly and those time frames, we kind of want to paint the story how it plays out in the next few days or hours or minutes. The way we change weekly time frame or weekly structure, the way we will close below this low for us to turn bearish, what do we need? We need, first of all, we need 1 minute to turn into super bearish, right? We need 1 minute to turn into super bearish. Okay, we have that. Well, that's not enough, right? Because if 1 minute is super bearish, what it's essentially cracking in terms of ice, it's cracking 5 minutes. Okay, 5 minutes is bearish as well. Okay, what's the next thing we need to crack in order for us to change the weekly? We need to crack 15 minutes. Okay, 15 minutes is looking like bearish as well in the most recent move. Of course, this is not gonna move the weekly time frame, but what do we need to crack next? It's an half hour, 30-minute candle, 30-minute time frame, right? 30-minute is starting to turn into downtrend. We don't have much down. We are starting a little downtrend, but right now we are closing the market anyway. But we really need to like start closing below those lows in order for us to have a downtrend and then have them as a resistance, right? But we need to crack 30 minutes in order to break 1 hour into a downtrend. So I hope you understand why I brought this ice example here. In order for us to break one hour into a downtrend, bullish 1 hour into a downtrend, we need to start making damage on 5 minutes, 15 minutes, 30 minutes, and so on. In order for us to change 4-hour chart into something bearish or reversal, we need to change the 1 hour and 30-minute chart, right? And then we can talk, okay, and then we maybe have daily time frame changing into something. And then once we are cracking the daily time frame, then we can discuss how we're gonna change maybe the weekly time frame as well. So that's the basic way how I see time frames. They are story within a story, right? Okay, let's give you one more example. Let's say you're expecting this hourly to keep going down, right? So what you're gonna do is you go on a 3-minute and you see that 3 minutes is actually finding some support. Okay, so maybe that hourly is not gonna close so red. Okay, let's go on a 15 minutes. 15 minutes is finding some bounce as well. So maybe there's not a much chance that this hourly turns into bearish. And now it comes into effect, like, what is your trade duration? Some people like to stay in trades for 20 seconds. You see me hold trades for hours. You see me hold trades for, I don't know, a minute, maybe 2 minutes. But you always need to kind of know what's the story for you needed in order to keep yourself in a trade, right? If you look 30-minute as an entry model, then you need to keep looking at 5 and 15 minutes to see how they are developing. Are they changing anything in your ideas in your 30 minutes? When they start changing against your trade, maybe there is a high chance that, okay, maybe you wait for the 15-minute candle close, the 15-minute starts to going against your 30-minute bias. Maybe you're not going to hold that short anymore because you already maybe maximized potential profits, and now we're going to reverse. I hope you understand what I'm saying. Now, the next question I get on stream is, why do we have 3-minute, 6-minute, 9-minute, 81-minute, those odd time frames? I need to clear this out as well. There was a guy who was probably the best and the brightest mind or inventor in modern history. It was Nikola Tesla. And he said that 3, 6, and 9 are the secret numbers of the universe. So for me, sometimes I treat the 9 minutes the same way I treat most people treat 5 minutes. I just like to give myself 4 more minutes. I'm applying whatever Nikola Tesla said about them being the secret numbers of universes. I thought, why not apply this to the technical analysis, gambling analysis? So that's the whole theory behind it. And also, I hope you see one thing there more as well. If I look at the 9-minute chart, I'm looking at 3 3-minute candles. If I'm looking at 27-minute chart, I'm looking at 3 9-minute candles. And you can do the same with the basic time frames that most of you use. If you look at 15-minute chart, you're essentially looking at 3 5-minute candles. That's how you start putting a story together. And now a lot of things that we're gonna cover later, like EMAs and volume and everything, that will affect those time frames a lot. So that's why I want to kind of put this thing in your head. There is a story developing between time frames. Try to, like, if you see me on stream, I go like this: 50 minutes, 30 minutes, 1 hour, 4 hours. Why? Because I'm trying to see what that story is telling me. Does it align with my 4-hour vision? Okay, I see that this next 4-hour candles might develop bearish. Does this lower time frame support it, or are we switching back? Now we are really close to the market close, so it doesn't really matter anymore. But I hope you start understanding the idea. And what is really important here is the candle closes. So as you see, I have this timer, and I want every single one of you, if you don't care about anything that I teach, take one thing from me: put that candle timer running, because that timer has saved my life and saved my trade so many times. How you do it? You go right click on anywhere in the chart, you go on the settings, and you go to this scales and line, and you have this countdown to bar close. This will essentially give you a countdown on a bar close. And why this is so important: a lot of times what's going to happen is, let's say we have this support, we all can agree we have support here. Now if this, and we have actually, let's put another one, we have support here as well. When we are looking those key areas, when we put weekly support on our charts, let's put resistance here as well, so we get even better picture. But when we put those areas on our chart, and you're looking on this support right here, you're looking for longs. You don't want to blindly long it. Yes, you can preempt it if you're really confident, and there's other confluences as well. Fine, should preemptive trade, but then you need to be ready to take some heat and have a quite tight stop loss as well, right? Confirmation essentially means you're gonna lose the best location for a trade, but you have a higher probability that trade hitting. Now, why I'm talking about this is because that candle timer can save your life. If this is a 15-minute support, you see how this candle has 3 minutes and 50 seconds to close. A lot of times people long this blindly, and this goes into EMAs, this goes into weave activation bands, 15-minute range strategy that I have, everything. Candle close is everything. If you see there is 3 minutes, or let's say if there is just new 15-minute candle opening and it bounces from the support, that doesn't mean you long it. You wait for this candle to close. How many times I have streamed a trade, I tell you guys, this is the idea, I'll wait for the 5-minute candle to close. Let's see, 5-minute candle to close, and if it doesn't, if it like, what I'm trying to say, if this 5-minute candle goes here, and you still have 3 minutes on this 5-minute candle, then maybe it's even better idea to then long it, because you are assuming that maybe it's just painting the bottom wick, and I'm gonna go into wicks in a moment. But it can go here and then it can close here, right? So that's why it's really important to always put attention. What is the candle timer really telling you, and what is it like? How much time you have left before you get your confirmation? And one thing that candle timer is super important and has helped me a lot in the trades is, I'm gonna try to find a really clear example of this. Okay, here we have. Okay, yeah, that's actually quite perfect. You probably think, what the fuck is really perfect? I'm gonna give you an example. So okay, here is even better example. So we have resistance here, right? We have, let's delete every other line, I don't want you confused, but we have resistance here, right? We didn't break it, and then we finally broke it. And you say, okay, the higher time frame is bullish, let me find long. I'm gonna long the breakout, I'm gonna put my stop below the last low, and I'm gonna target maybe this resistance here. We are in the all-time high market, so that's a high probability play, right? Now what happens with the most people is they exit here, and they exit somewhere here. So they don't ride the trade until it's fully there, because they see some red candles and they see the market switching on them. And that's why the timer on the candles has saved me a lot, or is so important, because if you look closely, I'm talking about this move here. If you look at closely, I'm gonna zoom in for all my zoomers as much as I can. Those candles have what? Wick. Okay, this candle doesn't have, but most of those candles have wicks, right? Now, those wicks usually happen if you are trading a trend. Those wicks usually happen in the first 2 minutes when the new candle opens. If you look at the 5-minute chart, for example. That's why it's so important to keep that timer on, because let's say you are in a long, and now the new 5-minute candle opens red, and you're like, I don't know if this long is actually working, maybe I should take profits there. That timer sometimes really helps. Oh, okay, we just opened 15-minute candle, we just opened 3-minute candle. If I'm looking at this chart on 3 minutes or 5 minutes, then let me wait for the candle a little bit to paint, right? They are painting the candle, and usually, as you see, even it's bullish candles, they have those bottom wicks. So a lot of times what's going to happen with traders is they are in a really good trade, they're going with the trend, and then candle opens red, and they're like, oh, is this now going to reverse on me? Is this going to switch on me? Okay, let's look at now. We just opened 5-minute candles 8 seconds ago. We haven't made the top wick yet. You see, we made the bottom wick. Now we're likely going to leave some wick on the upper half as well. But if this candle, if you're in short from here, and if this candle opened with the big wick to the upside, then for me, as someone who knows this, I would have even bigger confidence that this trade plays out. We made a small wick, but you see how this candle is developing. So always put those candle timers on your charts, and if it's a really trendy market, you will see it a lot. Every 5-minute candle opens against the trend, and then it goes towards the trend. And I'll show you one more thing. Every single reversal have in common: wicks, right? That means that the way the candle was painted is aligned is not aligned with the trend. Usually when there is a heavy reversal, and I've taught this on stream to many of you as well, usually when there's heavy reversal, what you want to see is, let me find a really good example. Okay, here. So usually what happens is we have a reversal to the downside, and then this next candle opens really red, and everyone's like, oh, short this market because it's going more down. No, we are leaving the wick. And the more you start putting attention on that candle timer, especially on 1 hour and 4 hour, when 4 hour candle opens, it can give you amazing entries. If 4 hour candle opens against the trend in the first 2 minutes, really heavily it goes against the trend, then there's a high likeliness that what we are doing, let me open the 4 hour chart really quickly, is we are leaving those wicks, right? If we have, okay, let's find a clear bullish trend right here. Every single 4 hour candle here in this area has what? Wicks. So if that 4 hour candle opens against the trend, a lot of times you see me going with the trend, and that 4 hour candle opening is giving me amazing entry. But this is gonna come later in the framework series. I don't want to confuse you a lot with wicks and everything. This is another topic. But I wanted to kind of do a time frame introduction, because time frames will come necessary in the future. Again, I'm going to show you one more example. You don't need to know anything about EMAs right now. Don't worry, guys. We're going to get into EMAs and everything. But this is EMA chart, and this white stairs is the 9 EMA. The same thing applies here. If we're going to come and retest it, you likely need to wait for the candle close to kind of get confirmation. You're not going to, oh, we are coming over this white stairs, let's go long. No, maybe we are just leaving a wick above this white stairs and we're gonna continue down. But I don't want to confuse you with EMAs, they are coming later. So coming back, we write a story with time frames, and always we try to paint the picture in a way. When we look at the 5-minute chart, we think what's gonna happen in the next 20 minutes, 15 minutes. We time it by 3. Right, 15 minutes is your answer, but if you look at the 15-minute timer, you kind of think what's going to happen in the next hour, what's going to happen in the next 30 minutes, 45 minutes, 1 hour. When we look at the 1 hour chart, we are thinking what's going to happen in the next few hours. We put that story in our head, maybe even on the charts, maybe put that story on the chart. What do you think going to happen in the next 3 hours? And then you're going to go into low time frames and see if they start confirming your story for the higher time frame. You see how you play with them, and I need to mention it somewhere in the videos. There's some people who are a lot of times asking or arguing in the trading space, can you only trade 1 minute chart? Is there a way to profitability in 1 minute chart? There is, if you know how to count your candles. And what I mean by that is, 1 minute, essentially, what you need to look, okay, we have 5 candles. These 5 candles here are 5-minute candles. So if you go on a 1 minute chart, but you are trading 5-minute chart, you need to really check the time. Okay, we are at, you see, 7:49. So this means this 1 minute candle is closing a 5-minute candle. This 1 minute candle is closing. This 1 minute candle is opening of a new 5-minute candle. You see how you put that story together. If you go on a 5-minute chart, if you go on a 1 minute chart, in 10 minutes, you see how we left this wick. We have MOC right now. That's a different thing. We are at market close. Don't put so much attention on the current price action. But what I'm trying to say is you can put that story even on 1 minute. You just need to check the overall time, right? If you are at 29 and you go on a 1 minute chart, it's fine. You can trade 1 minute chart, but just know that in that moment you are just you're really close to opening new 15-minute candles. So the next 1 minute candle is actually opening or closing of the last 15-minute candle. So it gives you a lot of information. You'll see maybe, okay, this 1 minute is closing below or above support. 1 minute candle close doesn't mean so much. Oh, wait, we are at the half hour. So we actually closed 15-minute candle below support resistance. That's what I'm trying to say. So anyways, guys, I hope you guys enjoyed it. Let me know in the comments, or just leave a like if you learned something new. We're gonna come back into timeframes many times with different concepts, but I just wanted to give you idea what to expect, how I approach timeframes. They are a story. You need to see everything, multiply everything by 3, put attention on the timing of the candles, how they align with the bigger time frame candles, like 1 minute aligns with 15-minute candles if you go on a specific time, and so on. And then how that story paints, and are they confirming each other, or is the lower time frame starting to maybe crack the ice on a higher time frame. Anyways, guys, I hope you guys enjoy it. Enjoy the weekend, and I'll see you guys in the next episode. Ciao, guys.